Tough measures were introduced in the Minister for Finance's Budget Speech 2011. The Minister stated that the overall objective of this year's budgetary measures will take the first step in the National Recovery Plan to stabilise the economy and return the country to growth. The main points contained in the 2011 budget affecting businesses in Ireland are personal tax. The changes introduced in Budget 2011 mainly centre around PRSI and the new universal social charge, which requires some contribution, however small, to the provision of services. This charge is separate from income tax, which is levied proportionately as income increases. In Budget 2011, there was no change introduced to income tax rate. However, there have been significant changes to exemption limits, tax rates, tax credits, and standard rate bands. Tax credit and rate bands have been reduced by approximately 10%. The health levy and income levy have been abolished and will be replaced by a universal social charge. PRSI has also undergone a number of changes in Budget 2011. The employee PRSI ceiling will be abolished as of the 1st of January 2011, and the PRSI rate for Class S self-employed individuals will be increased from 3% to 4% as of the 1st of January 2011. There have been significant amendments to pensions introduced in Budget 2011, which will come into effect from January 1st, 2011. The current employer PRSI exemption for employee contributions to occupational schemes and other pension arrangements will be reduced by 50% from the 1st of January 2011. The annual earnings limit is being reduced from €150,000 to €115,000. Top-up pensions made in 2011 in respect of 2010 are restricted to a maximum earnings limit of €115,000. The overall lifetime limit on the amount of tax-free retirement lump sums that an individual can draw down from pension arrangements is being reduced to €200,000. Amounts between €200,000 and €575,000 will be taxed at the standard income tax rate, with any amount in excess of €575,000 being taxed at the marginal rate of income tax. The energy-efficient tax break has been introduced in an attempt to encourage homeowners to increase the energy efficiency of their homes. The new scheme will provide relief up to a maximum expenditure of €10,000 at the standard rate of income tax. Credit will be given in the following tax year. Under Budget 2011, the rate of retention tax that applies to deposit interest is being increased from 25% to 27%. The increased rate will apply to payments made on or after the 1st of January 2011. Also being increased is the rate of tax that applies to life assurance policies and investment funds. The increase of 2% brings the rate to 30%. The National Recovery Plan on the 24th of November 2010 abolished patent royalty exemption and relief for approved share option schemes. A number of other reliefs will be abolished from the 1st of January 2011. These include relief on loans to acquire an interest in certain companies, relief for trade union subscriptions, relief on subscriptions for professional bodies, relief for new shares purchased by employees, exemption from BIK for employer-provided childcare. Rent relief will be phased out over the next 8 years. Now we will take a close look at changes to business tax. In good news, there has been no change to Ireland's 12.5% corporation tax rate. Another positive outcome of Budget 2011 is that the scheme of accelerated capital allowances for expenditure by companies on certain energy-efficient equipment is being extended for a further 3 years, to the end of 2014. Start-up companies are also benefiting. The 3-year tax exemption for start-up companies is being extended to include start-up companies which commence a new trade in 2011. This scheme is being modified to link the value of the relief to the employer's PRSI contribution. The current business expansion scheme is to be revamped and renamed as the Employment and Investment Incentive. Under the new incentive, the limit that can be raised by companies will be increased from €2 million to €10 million, and the amount that can be raised in any 12-month period will be increased from €1.5 million to €2.5 million. This incentive will first have to be passed by the EU. The current car scrappage scheme is being extended to encourage the purchase of greener cars until June 2011. VRT relief of €1,250 for scrappage will be provided where a car of 10 years or older is scrapped and a new car of certain emission bands is purchased. VRT relief for green vehicles has been extended to the 31st of December 2012, with a rate of relief of up to €1,500. A new withholding rate of 20% will apply to subcontractors registered for tax with an established compliance record. The existing 35% rate is being retained. Restrictions have been introduced to Section 23 and capital allowances. Professional advice should be sought on how these restrictions might affect individuals and businesses. New residential stamp duty rates have been introduced by Budget 2011. There will be a flat rate of 1% introduced on all residential property transactions up to a value of €1 million, with 2% applying to amounts above €1 million. Budget 2011 did not introduce any changes to VAT or CGT. However, the capital acquisition tax thresholds have been reduced by 20%. The budget did not introduce any changes to taxes on drink and cigarettes. However, one of the changes introduced in the budget that will have an immediate effect on your wallet is the increase in tax on petrol and diesel. Effective immediately, there will be 4 cents per litre added on petrol and 2 cents per litre added on diesel. If you require any further clarification on any of the points raised in the budget, please contact your business advisor.